The world of investing is about to be explored, and more particularly, the well-known site eToro will be our entry point. Taxes are an issue that frequently arises alongside the excitement that comes with a good trade, which is something that we are all familiar with. So, let's get right down to business. Does eToro take care of your taxes for you automatically? What's the quick answer? I'm sorry to say that no. You, as the investor, are ultimately responsible for calculating and paying taxes, despite the fact that eToro offers you with excellent tools and resources for tracking your assets. But fear not, tax warriors. This doesn't have to be a scary process. Let's unpack what you need to know and equip you to handle your eToro taxes like a pro. Why doesn't eToro handle taxes automatically? There are a few reasons why eToro doesn't take care of your taxes directly. The biggest factor is location. Tax laws vary greatly around the world. What's taxable in one country might be exempt in another. Additionally, your individual tax situation plays a role. Your tax bracket, for instance, will determine the rate you pay on your investment gains. Simply put, eToro can't possibly account for every tax scenario on their platform. But eToro has your back sort of. While eToro doesn't handle the tax filing itself, they do offer some helpful resources to make things easier. Here are a couple of key features. Account statements. These statements provide a detailed record of all your eToro activity, including buys, sells, dividends, and any fees incurred. This information is crucial for calculating your tax liability. eToro Tax Report. Premium feature for a fee. eToro offers a tax report that summarizes your investment activity and provides a breakdown of potential capital gains and losses. This report can be a real time saver, especially for those with complex portfolios. Understanding your tax obligations. Now that we've established eToro's role, or lack thereof, in tax handling, let's talk about your responsibility as an investor. Here are the key things to consider. Taxable events. Generally, anytime you realize a profit on an investment, you'll owe taxes. This applies to selling stocks, options, or even cryptocurrencies held on eToro. Capital gains versus income. The type of tax you pay depends on the investment and how long you held it. Short-term capital gains, held less than a year, are typically taxed at your ordinary income rate. Long-term capital gains, held over a year, often benefit from lower tax rates. Reporting requirements. Depending on your location and the amount of your gains, you might be required to report your eToro activity on your tax return. It's crucial to consult with a tax professional to understand your specific reporting obligations. Tax tips for the savvy eToro investor. Alright, so you've got the responsibility part down. But what can you do to streamline the process and potentially minimize your tax burden? Here are some pro tips. Keep meticulous records. Download your eToro account statements regularly and maintain clear records of your trades. This will make tax time a breeze. Consider tax implications before trading. Think about the potential tax consequences before making investment decisions. Selling assets held for a longer term can qualify for lower tax rates. Seek professional help. If you have a complex portfolio or any uncertainties, don't hesitate to consult with a tax advisor. They can help you navigate the tax code and ensure you're filing correctly. Remember, this video is for informational purposes only and doesn't constitute financial or tax advice. Tax laws are constantly evolving, and your individual situation might be unique. Always consult with a qualified professional before making any investment or tax-related decisions. With that said, thanks for watching. Until next time, happy investing and responsible tax filing.